Budgeting with an unpredictable income can feel like a financial roller coaster, especially for freelancers, gig workers, and content creators. What if your paycheck looked like a roller coaster? 1 month, $5,000. The next, $1,200. You never know which is coming next. If you're a freelancer, rideshare driver, content creator, or gig worker, this isn't hypothetical. It's your reality. So how do you budget when your income won't sit still? Traditional budgeting assumes steady paychecks. Rent on the 1st, groceries by the 5th, savings on the 15th. But when your income swings wildly, that system collapses fast. The secret isn't to predict your income, it's to decouple your spending from your earnings. Here's how it works. First, pay yourself a salary from your own business. Open a separate checking account for personal use. Every time money comes in, move a fixed amount, say $2,500 into your personal account. That's your monthly paycheck. The rest stays in your business account as a buffer. This simple shift changes everything. Now your rent, groceries, and Netflix bill come from a stable source, no matter if you had a great month or a dry spell. Second, use the baseline income method. Look at your earnings over the last 6 to 12 months. What's the lowest you made in any single month? That's your baseline. Build your essential budget, housing, food, insurance around that number. Anything above it? That's bonus money for savings, debt, or fun. For example, if your worst month was $1,800, live like you always make $1,800. When you earn $4,000, great! You just saved $2,200 without even trying. This method ensures you can cover essential expenses even in the worst-case scenario. Third, automate your essentials. Set up auto transfers the day after you get paid, not on the 1st of the month. Because in the gig economy, the first means nothing. This aligns with irregular payment schedules. And here's a pro tip. Use apps like Inab or Monarch Money. They're built for variable income. You assign every dollar a job as it arrives, not based on a fantasy forecast. This helps you track income and expenses effectively. Beyond these strategies, remember to separate your savings from your spending money, ideally in a high-yield savings account. Building an emergency fund of 3 to 6 months' worth of expenses is crucial for financial cushioning during lean periods. As a freelancer, you're responsible for self-employment taxes. Set aside at least 30% of each payment to cover these. Consider a zero-sum budget, allocating all income to expenses, savings, and debt repayment, so nothing is left over. Regularly review your budget and adjust it as your situation changes. Plan for irregular expenses like holidays in advance. Separate business and personal finances with distinct bank accounts and credit cards to simplify tax preparation and protect personal assets. Maintaining good credit is also important, as it can help you reach financial goals and provide access to credit during lean months. But budgeting is only step one. If your income is unpredictable, your taxes, savings, and investments need a whole new playbook too. In part 2, we'll break down the essential tools every gig worker needs, from invoicing to emergency funds, and why your bank account shouldn't look like your Uber dashboard. Stay with me.
Welcome to Essential Tools for Freelancers and Gig Workers, your guide to mastering financial independence. Being your own boss sounds great until you're drowning in invoices, receipts, and tax deadlines. The gig economy offers freedom, but also administrative tasks. So, what financial tools make a difference in managing your freelance career effectively? First, separate your money completely. This is foundational for any successful freelancer. Open 3 distinct accounts: business checking, personal checking, and a dedicated tax savings account. Your business checking is for all income and gig expenses, keeping professional finances clear. The personal checking account is for your salary and daily spending, ensuring personal financial stability. And the tax savings account is where you park money for the IRS, preventing future headaches. Mixing them leads to surprise tax bills or accidentally spending your tax payment. Second, track every dollar in real time. This proactive approach is crucial for clarity.
Apps like QuickBooks Self-Employed or Stride categorize income and expenses from your bank feed.
If you drive for Uber, it logs mileage. If you sell on Etsy, it tracks materials, simplifying record keeping. At tax time, you're not scrambling. You're ready with all necessary information. And don't forget efficient invoicing. It's key to getting paid promptly. Consider using Wave, which is free, or Honeybook, designed for creatives. These tools send professional invoices, auto-remind late payers, and get you paid faster. Third, build your safety net differently. Traditional advice often falls short for freelancers. Saving 3 to 6 months of expenses can be impractical with varied income. Instead, aim to save 10 to 30% of every payment you receive, right when it hits your account. Treat this saving as a non-negotiable bill, a fixed commitment to your financial future. This consistent approach builds a robust buffer, smoothing out variable income chaos. Automate it. When $X hits my business account, move 20% to savings. No willpower needed. Now, what about retirement? You have excellent options beyond a traditional 401.
A SPIRA or Solo 401 allows you to contribute up to 25% of your net income, all tax deferred.
Apps like Betterment for Business or Fidelity make the setup painless and accessible. But here's the biggest gap most gig workers miss: comprehensive insurance coverage. No employer means no automatic health, disability, or life coverage, leaving you vulnerable. A single accident or unforeseen event can wipe out your financial stability. Look into short-term disability plans or health-sharing ministries if traditional insurance is too costly. The right financial tools don't just save time, they protect your freedom as a freelancer. Without them, the gig economy feels like a constant struggle for survival, not liberation. And that brings us to the final piece: mastering taxes, savings, and investing the gig worker way. In Part 3, we'll cover how to avoid April panic, build wealth, and invest, even with variable income. April 15th shouldn't feel like a horror movie, but for millions of gig workers, it does. This is because they often forget one brutal truth: no taxes were withheld from their earnings. If you earned over $400 from gig work, you owe self-employment tax 15.3% for Social Security and Medicare, plus income tax.
The IRS expects you to pay it quarterly, not just once a year. So here's your tax survival plan.
Step 1. Save 25 to 30% of every gig payment in a separate high-yield savings account. Yes, even from that $50 DoorDash shift, this isn't optional. It's your future self's lifeline.
Step 2. Pay estimated taxes quarterly using IRS Form 1040. Yes, or let QuickBooks or TurboTax Self-Employed calculate it for you.
Miss a payment? Penalties add up fast, so consistency is key. Step 3. Deduct everything you legally can, from your home office and laptop to your phone plan or co-working space. The IRS allows these deductions if they're ordinary and necessary for your work. Keep digital receipts in Shoeboxed or Expensify. At tax time, you'll definitely thank yourself. Now, what about savings? Forget pay yourself first. In the gig economy, you need to pay yourself consistently. Set a fixed monthly transfer from your business account to your personal account, your salary. Then, automate savings from that salary, just like a traditional job, and build 2 emergency funds. First, a short-term fund for 1 to 2 months of baseline expenses for slow weeks. Second, a long-term fund for 3 to 6 months for true crises. Keep them in separate buckets, maybe Ally or SoFi, so you don't accidentally dip into the wrong one. Finally, let's talk about investing. You might think, I can't invest, I don't know what I'll earn next month. But you don't need certainty, you need consistency. Use micro-investing apps like Acorns or M1 Finance. Round up your gig earnings to the nearest dollar and invest the change. Or set up automatic weekly transfers of $20 rain or shine. Over time, that compounds. $20 a week at a 7% return equals over $5,000 in 5 years. Not life-changing, but it's momentum. And if you're earning solid income, open a Roth IRA. Contribute after-tax dollars now and withdraw tax-free in retirement. Platforms like Fidelity or Charles Schwab offer $0 fee accounts with fractional shares, so you can start with just $5. The key mindset shift? Stop thinking like an employee. Start thinking like a CEO of Me Incorporated. Your income may be unpredictable, but your financial habits don't have to be. With the right systems, the gig economy isn't just survivable. It's a path to real financial freedom. If this helped, hit subscribe. We break down money, work, and independence every week. No jargon, no fluff. Thanks for watching.